Welcome to Revelations, where you get to speak to the divine Lord of liquidity through me, Sacred Prophet. I am merely a vessel.
Well, we need you today, Vessel, because the world's on fire more than I can. What's going on?
Peter, I can't tell you why anything happens. I can only tell you what, when, and how. Do with that what you will. Okay? That's all I can really do. I'm a limited being. Okay, so I just wanted to go over the trades. So we had the weekly trade that was completed this week.
Mhm.
And so the question now is, it's always this part here that I get a little bit iffy on, where all kinds of things can happen. 1 second here.
Okay, first of all, what are we talking about in this stream? What's the topic?
I just want to just confirm the trade for the week has been completed, and then go over 1 second here, and then go over what we're going to be looking at for the week ahead, for the rest of the week, the next 2 days.
So you're not going to be telling me if Trump's tariff play was on purpose, a genius, 4D chess, high IQ move?
Well, I mean, I could pretty much. Well, there is an interesting part to that.
And then there's the 10-year shooting up like Starship.
Well, that's it. The 10-year going up is what then caused this whole reversal. You can say that maybe this was planned or whatever it is, because the 10-year is going up because foreign nations are selling, Asian nations are selling bonds. Right? They're selling
Okay,
bonds.
I'm sorry. I have to pause you. We have to do this in segments. So what segment are we going to talk about right now?
All right, let's just go over the trade. I'm going to go over the trade that we just had. Okay, so I just want to bring this up here because the weekly trade that we talked about on Sunday. Remember, Sunday we were around here. This is where the week closed. We're around 78.3.
Right.
And then I said the trade that we're looking for is a move up to 83.2. Okay?
Mm-hmm.
You'll also remember that we also talked about the idea that there's usually a first dip. There's a dip, a low in the first day, and that low was what you would use as an entry in order to make your entry for the week ahead.
Right.
You remember this?
Yes.
Okay. So this is why it's important, because so oftentimes for this type of trade, especially when the trade can net, this was a 6% move. So you can get 300%. I usually take 2 or 3 bites of the apple. I didn't do it this time because I like to wait for the dip nowadays for the first day. And so here we waited for the dip, and the dip that ended up over here, if we just take a look real quick, you'll see, I'm going to remove the weekly lines, that we did have a daily unmitigated level that was there. So over the last couple of weeks, I've been talking about the $74,000 level at the bottom, but also the 76.5 level here, a daily unmitigated level. And so we actually got there, and I used that as my entry for the week. So that was great. What I just wanted to point out here is not just to pat myself on the back, is I do like patting myself on the back, but just to point out that when we were even at the lows over here, and this is another reason why you want to get your good entry or have another reason to try again to get to the weekly. Over here, I mean, my phone was off the hook with people telling me the next move is we're going to 62.
Yeah, the sky was falling. People were no hope.
Which could very well be. It could very well be the case. But we don't go by wishing or guessing or hoping. If that's what the chart says, that's what we'll do. If that's not what it says, that's not what we're going to do. What the chart was saying through this whole period is that we're going back up to 83.2 somehow, some way.
And you said that. I remember when you tweeted it out. Honestly, Tom, I'm with you with all these things. When we were sitting there at 70, 76, 78, and then I saw 83.2 on your charts, and everybody was saying the sky was falling, I was like, bruh, we're not getting to 83.2. No check mark for that box. Nope.
That's right, exactly. And we got there. You see here, I bring this up every now and then, but the when here matters. Oftentimes these moves will happen within the daily time frame, like before the day closes. Before these days close, these moves happen. So this fell into the day's close, and this rose up all the way up to
Wow.
right before the day's close. All right. So it gives you sort of an idea, like if it's going to happen, it's going to happen around this time. Like it can happen within this time frame. Plus, we're ticking down. Usually, the weekly trade happens on the first 2 days. Here, it pushed it to the third day, and so it had some moves to make, and it got back up over here. Okay. So, and by the way, where the price bounced over here several times, so over here, so the daily trade for on Monday, if you remember, was 80 something. Was it 80.7?
Yeah,
I think it was. I can't remember the exact
80.7.
Yeah, 80.7. And you'll see here, we knew that from even over here. So even as it dipped down over here, I took a long because we hit the daily level that was down here. And I took that long all the way up over here. It wicked it, closed the profit. You missed that. You even had a second chance here to exit your position over here. And it's no coincidence that this daily VWAP level is coinciding with the downtrend. It's no coincidence. These things all work together. It's providence. Here I took a short. So here I'm already in the long anyway. I'm already in the long and taking the short here towards 74 because I still saw 74 is a level that we haven't mitigated yet. And so 74 was still on the table for me. And so I took a short over here. But then I still have my long position. I even added to my long. But okay, that being said, the weekly trade completed. Where did we end up over here, Peter? Not only did we end up exactly at the weekly level at 83.2, but it coincides with the monthly downtrend and our long-term downtrend. All these things work together. All right? And because of this pressure over here, we didn't get up to this level over here, which I thought we might get to because we were nearby, but there was enough pressure in order to sell off. So now we're taking a look at the daily trade for today, and the daily trade is at 78.3. Sorry, 78.4.
Mm-hmm.
So chances are we're going to head back down here. That's why I'll cover my short, and then I'll open up a long to head back up to this level. The thing is, after this clears, we don't actually have the nearest weekly level. What do you think I'm going to say, Peter?
Well, if your tweet is any indication, I'm kind of afraid about what you're about to say.
Well, the nearest weekly level is still at 74. But if we take a look over here, you can't see it there. 1 second. If we take a look at the sidebar over here, our yearly average that we've been paying attention to is now crossing above that lower level, the lower 74-ish level that we're talking about. When I was saying 74, that was just to give a little buffer. It was actually 73.7 or whatever. But essentially, it's crossing that level. Let me just see if I can get it to show up here. We have too many lines in the chart.
And then that's going to...
it's not exactly over yet, but we are getting there.
So that's going to cancel that level, that lower level, right?
Yeah. Yes. If we're still in a bullish trend, and this lower yielding wave crosses over here, then that will, for me, count as mitigating that level. And then the next level that we have to pay attention to is up here at 96.5.
My goodness.
That's right.
96.4.
Right. So we talked about a 20% move that can happen.
But you said it's not going to necessarily shoot straight up there.
No. I'm just saying within it could.
Yeah.
Right? People didn't think the 7% move was going to happen either. It could happen. Right? Because remember, we still have a bunch of shorts that need to get their tails beat. Let's go with that. So we have here $8 billion worth of shorts that are still there, and versus 245 million longs. These are leverage positions and futures positions. So these are people who have to cover their positions, as opposed to spot holders who could just hold their position or hold a short all the way to zero. These positions get liquidated. And then we have 3 billion over here versus 62 on the BTC USDT pair. So a lot more shorts that need to get liquidated. This is why you can get these explosive moves, because the shorts get run out and then the price gets moved up. Now, if we take a look at the daily, just a short term, you'll notice that we're actually lopsided now towards the longs. The longs are trying to take control. The longs over here, the longs over here. So the longs are trying to are coming into the market. So this is offset by the larger time frame where there's more shorts than there are longs, and so we can get this whipsaw. This is why I think moving down to 78, moving down to the daily level is totally possible for us to move down here. Let me just put this back on. Yeah, getting back down to 78.4 to me seems perfectly normal. And as long as this level that we're looking at here, this level here that's developing for the daily, if that closes anywhere above this daily level, our tracker will turn to bullish for the daily, and we'll be starting a bullish uptrend. Look, I don't like front running things. It can be what it is.
Just look at the chart. Just look at the numbers.
So currently,
your feelings out of it, ladies.
Exactly. So we still have 74 is still a small possibility, still a possibility we get there. If we're headed into a bearish, a bear market, well, then we're definitely going to 74 and lower. So I mean, but if we're gonna, the bull case is that 74 could be. I wish we touched it over here, Peter. I wished we touched it, but we didn't.
We were off by 1%, right?
Yeah, exactly. Less than 1% over here and then 1% over here. But I am amused that the next current level is up here at 96.5, and you'll notice that also at the same time there's another. You see, there's a blue here and a red.
Yeah,
it's a double level, and right above that is another daily level, and right above that is trend. So this whole area up here is a nice magnet for just completely drawing the price up.
That would be bananas.
It'd be bananas. Yeah.
Tom, that would be crazy.
That's right.
Okay, so is that the high of the cycle?
No, God, no. That's not even at all-time highs. That would be the tinder. Look, you get to these levels, and
right
when we take a look at the liquidation charts, once you get past the, let's go over the daily. So over here, the big, this big zone over here, this is at, let's call it 89. And then over here, it's at 89. So 89 is like a level where there's a huge amount of liquidations. But you have to imagine every time we hit these big levels, it's like a boost forward in the market because they're covering. So it's a boost forward in the market. So 89 can bring us headed over here to 89, which is not even that far away, right? This 89 zone brings us over here. That washes out the shorts. And then we just start moving towards long. The longs start going leverage long until we move up. And then when we get to the top of the cycle, the longs will be the ones that are lopsided. And then I'll be calling for downside. Okay. And just to take a look at our liquidity indicator, our projected liquidity indicator one more time. We're seeing here that remember I was saying around April 7th is when I'm expecting a big move up. It's no coincidence. It's happening. No coincidence. Just boom.
Look at all that liquidity waiting.
That's right. So if this is for me a sign that we are right on track, we should get a little bit of low, and the next burst should be around in about 2 days. And then we start building out the levels until we move up. This big bump over here in May, at the end of May, is going to be bananas. This can move up. Like if this move over here was 7%, you can imagine that this move is double that, even more. That we get a dip and then a rise up. Anyway, so it's pretty interesting. That's what I'm looking for the next couple of days. What I'm looking for is to see how the daily levels are developing because our weekly trade is done. So now we want to see how we operate there and what we're looking for. And I mentioned this here because I don't think I actually ever talked about it before. That what I'm looking for the story, for the narrative, is how the developing levels how these levels that are developing, these dash levels, as long as this stays above here, that's bullish. Even if it comes all the way down to over here, it's still bullish. And then we can expect to use these guys as stair steps all the way up to our price.
Well, Tom, in a world of uncertainty, you're providing some much needed clarity. And actually,
Don't
look,
worship me, guys. Don't worship me. No, honestly, I don't like that.
What you're giving me here today is it's nootropics. I'm getting a boost. All right, I'm getting my methylene blue. I'm getting a nice kick for the day. Excited to see this. So you're saying that move is going to happen over the course of 2 days?
The move for what?
96.4.
Oh no, that I think it's going to happen. I wouldn't be surprised if it happened before the end of next week.
Okay.
What I'm expecting now is to see the game. Now is the game up to 89,000. 89,000 is where there's a bunch of liquidations happening, or a bulk of the liquidations have been done, and how the price moves up to there will let us know a lot. And as the price moves up, the more drastically it moves up, the more that yearly average will tick up higher and will mitigate that lower level sooner. If that lower level was mitigated right now, I'd say let's go all in. But it's not. And so the downside risk is still there. We haven't broken the downtrend.
Given what's been happening, I wouldn't be surprised. Like that to me seems like the natural move here.
That's
like
right.
an orderly stair step up. I just don't see it. It's crazy town what's happening. All right. When are you tweeting out these moves, or did I miss it?
I already did that last night.
89? I don't see 89 anywhere.
No. That I just talked about the revelations. I only tweet out the levels for the day and the week.
Okay, so 80.7, we already hit that. 83.2, didn't we hit that already?
Yeah, 83.2 is the weekly, and so now the question is 73.4. Sorry, 78.4 is today's level.
0.5. Okay, I see it. 78.5.
Okay.
Today's daily. Okay, so there's not another weekly call?
Not until Sunday.
Not until Sunday. And that's
right now it's developing to be around 78.5, but that could change drastically.
All right. Look, if anything's happening in the markets, any moves, of course, we're going to be popping on with revelations. But tune in on Sunday for Sunday Fuel to find out what's what the future will be. Tom, I can't let you go without you telling me like what are your thoughts on this tariff thing with Donald Trump? I mean, the spy, everything. I mean, it's wild. Like, can you shed some light?
Number one, completely ignore whatever narrative the government says. So Scott Besson comes out and says there was Donald Trump's plan all along, that the idea was to goad China into manipulating their currency and manipulating the tariffs. I mean, they just started adding on and on and on and on, so that would give cover to give a 90-day pause to the tariffs for all other nations to a certain degree, and show the world that China is perfectly willing to be a currency manipulator and all that, and so they can't be trusted for a world reserve currency. You're going to have to deal with us. There's this paper called the Moran paper. I forget the name of it. Let me just actually get the title here. I thought it was pretty interesting.
Oh yeah, I was reading about that. Was it
A user's guide to restructuring the global trading system? It's pretty interesting. And the idea here is that the 4D chess moves that they're attributing to Trump is that he actually does want to deal with Triffin's dilemma, with the U.S. dollar being too strong. Don't listen to the Peter Schiffs of the world. The dollar is not weak. The problem is that the dollar is too strong. And not to go into the whole mess of it, but we remember that because the United States is the world reserve currency, other nations have to solicit dollars.
Right.
And this process causes dollars to be sent out from the American system out abroad, and for the American system to become financialized, focus more on the producing of dollars and the management of dollars, which is the thing that the U.S. exports. That they're not exporting oil. I mean, yes, they export all that sort of thing, but their main export is U.S. dollars. Let's not forget that. But at the expense of the manufacturing base, and then also the middle class of the United States. Rich get richer, poor get poorer. If you can use the financial system like we're trying to use the system now, you can get very wealthy. If you don't, you're working at Amazon waiting for the robots to take over your job. So they're saying the 40 chances that Donald Trump is trying to mitigate this by using the fact that they are the world reserve currency to actually use it as a weapon in the trade war, to force negotiations from or concessions from other countries for them to pay different things and to get access to more of their markets, so that the United States has an ability to manufacture, not just manufacture, but export their goods out to the rest of the nation. You can imagine that it's hard for the United States to export physical goods because it costs so much for a nation to buy something. You tell someone in the Western world that, or in the United States, that the sandwich that they are buying cost $27, and okay, it's $27 sandwich. You tell that to somebody in India, and they're like, that's as much money as I make in a day. What are you talking about? I can't spend
a day.
That on a
It might be more than that. Yeah.
So the rest of the world can't handle that.
Okay,
and so if this is the case, that he's trying to mitigate Triffin's dilemma or Triffin's paradox by promising to sort of like really, they sort of want to have the rest of the world, this is the pitch, that they want other nations to actually hold or consider the US dollar less of a reserve asset, a little bit less, and in return, Donald Trump is going to countries will fall into 3 buckets. I think it's green, yellow, and red, with different advantages, protections, access to markets, different tariffs levels, and all that sort of thing, in order to sort of like trade that off. Which is, if that's the case, it's actually very clever, because it's sort of like you're like, okay, eventually the world reserve currency will destroy our country, so let's move towards not having that by saying we have it, but not, and then using that as a leverage to move forward. Right. So it's sort of like, okay, you know that your $1 million loan is going to come due in a year. Let's just try to build up some productivity in 6 months, so that when the year comes, it's going to be bad, but we still have some protection, which is the whole Ron Paul dream. I don't even remember the Ron Paul dream. This was the whole idea. Look, we're going to have to take pain eventually.
Yeah,
that's what we have to do. And so we get pain, 20% down in the stock market, which is frankly nothing. Okay, it's just that it happened out of the blue, and the people who usually make a bunch of money off of it weren't ready to make a bunch of money off of it.
Yeah, I feel like that's the biggest thing that's happening. People are like, well, I didn't know about this game, but some people knew.
Right, the call options that exploded 10 minutes before the announcement. Sure, but that's not like the trades that normally happen are the billions or trillions of dollars.
So do you think this was insider trading or whatever? Do you think it was?
Well, forget insider trading. Big news like this is going to happen. There's also going to be insider trading. I mean, we're fine with it, Nancy Pelosi. We got to be fine with it with everybody else. The question is, was it planned in order to cause the turmoil, to profit from it? No. I think it's just hyenas come to the carcass after it gets taken down. But there is a restructuring, a global restructuring to the global financial system.
Restructuring?
Yeah, to the financial system. That's definitely on the way. There's no way around it now. Nations abroad are like, because the idea is like, well, just wait 4 years, and when Trump is gone, then you don't have to worry about it. Which is why I think he's floating around this idea that he might run for a 3rd term. Not because I think he's going to run for a 3rd term, but you need other people to be like,
yeah, you need him to. Yeah, exactly. I was actually talking to my partner about that. It was like, part of what gives the president power is this idea that his policies will continue. If people think in 2 years this guy's a lame duck, then he's not going to have any power. So, and I don't see a clear successor. I mean, Elon can't run for. Well, he could run for president, but I don't see that happening. And none of these other. I'm sorry, Vivek. You can be governor of Ohio, but you ain't going to be president. JD Vance, okay, solid dude. I don't know if Jim Halpert is going to be president. I like him. And then on the other side, I don't know what's going on. So unless RFK runs, but I think he's too old. So I don't see a clear successor. Donald Trump's sons, I mean, I don't know. I don't know anything about that. So there's no clear successor. So saying that he's going to run for a 3rd term, I don't think it's a bluff. But anyway, let's leave that go. So you started off by saying ignore the narrative. So
ignore the narrative.
Then pay attention to what?
Yeah, the bond market yields went back up to 4.7, 4.9. Can't have that. The governments don't care about the stock market. They care about the bond market. That's the liquidity for the system. And so there's massive selling of treasuries because I'm going to have to leave in a second. Massive selling of treasuries, which means that there's a huge demand for dollars. You sell the treasuries in order to get the dollars you need in order to do what you need to be doing. And so it's just too much turmoil, especially with the Japanese yen strengthening. So it's just too much. And no matter what, like Donald Trump is not going to sit there and just let the whole thing collapse. And so there's going to have to be this thing of, hey, we're going to pull back. And I think it sort of makes sense that if you're going to be doing these crazy policies, to say it's on, it's off, it's on, it's off, it's on, it's off, you create the volatility necessary in order to wrangle people to force them to do certain things. And at the same time, and you get your leverage because people go, I don't even know what this guy's going to do. And of course, they're going to be ringing his phone and be like, okay, what do we do to settle this? So you get that volatility without actually having to leave everything on. So I think it's clever if that's the plan. And if it's not, wait, Mr. Magoo, you're way too where you need to be. That's fine by me. But I'll have to leave it there. So I gotta get going.
Sacred Prophet on X, Sacred Prophet on YouTube. Like and subscribe. You need this. All right. We'll see you again very soon.